Just as the situation in China appears to be worsening, many are wondering, what is stock and how do stock markets work? To understand how stock works, we must firstly understand how the modern economy works. In the modern economy, companies and businesses alike are split into small pieces called shares. These shares are then sold in the stock market and bought by humans, businesses, and metal funds. Shares are bought because their value can increase or decrease according to the basic principle of supply and demand. So, say if a person bought a share of a company on Monday for £1, they could then sell the share for £3 on a Tuesday and make a £2 profit. But, unfortunately, it is never usually this easy. Buying and selling stock usually involves taking risks, and nobody can predict the markets. The values of shares rise and fall unpredictably. So stock markets are just the institutions that house all of the buying and selling of stock and shares. Also, a stock market index is an estimation of the value of a certain section of the stock market. It's often estimated from compiling the value of certain stocks and can be used by investors and financial managers to describe the markets. Examples include the Dow Jones Industrial Average, FTSE 100, S&P 500 Index, and the SSE Composite Index. Economic crashes, similar to what is going on in China, are usually random and natural in the markets. However, when they do happen, there can be dire and good consequences for lots of other countries, not just the place of origin. This is because most markets are interconnected, and when, say, an economy like China is doing badly, investors may instead choose to take their money to Wall Street in America, where the economy is more sustainable. So that, simplified, is how stock markets work. Thanks for watching, people, and if you enjoyed this video, then don't forget to like, share, and definitely subscribe by clicking the link here. Thanks for watching.